Everything's sounding pretty good, honestly. Cannot complain.
Yeah.
All right, so let's get into some stock analysis here. Let's go over the futures first, and we'll
Yeah.
make sure to explain everything if there's new viewers here, so
Yep.
we can educate everybody on like what we're talking about. We'll make sure to take it nice and slow.
Yeah.
So let's go over the Nasdaq. Or to this. Let's go. Yeah, let's go over the Nasdaq
All right.
first.
Let's start with the Nasdaq right on top. All right.
Yes, perfect.
I'm experiencing a little lag here. Okay. All right. So I saw a pattern here on the Nasdaq future. It looks like I pretty much put a trend. Let me show you guys how to draw a trend line here. I'm gonna remove it. You gotta go down here to the drawing tools.
So, real quick, just so everybody knows, we saw a huge sell-off here on Friday.
Right.
It was really nasty really nasty end of the week.
Yeah.
So we got to make sure we keep that in mind.
Right.
The futures haven't really moved anywhere specifically
Yeah.
going into this when it opened up here a couple hours ago, but we are seeing a little bit of consolidation here, so we might see it open red.
Yeah.
If that goes. But then Monday is always a buying day during the week.
A lot of
So
volume.
we
A lot of
might see
volume.
a little bit going up, but something to look at here. That's your SMA line, right?
Yeah. Exactly. I was about to say that. Looks like we got rejected.
Yeah, it got rejected. So let's actually go over what an SMA line is, so everybody kind of understands what we're talking about. The SMA is it's a simple moving average. So it's the average price over a specific period of time. So on the time frame that we're looking at right now, I believe this is
Here it is.
yeah, let's go to we're on the 180-day 4-hour chart. So the simple moving average is the average price
Yep.
over the specific period of time. So usually when you're looking at the technicals of the stock market, the SMA is a good understanding and it's a good support and resistance of where the stock market's going. When it breaks above, we start seeing an uptrend. If it breaks below, you start seeing a downtrend. So let's actually go over quickly what the support and resistance line is. Manny, do you want to explain that?
Yeah, sure. Yeah, I can give you guys a quick example of what a support and resistance is. Let's see. Let's check it out with the SQ. Simplify it here. Let's go to the 20-day 1-hour chart. So a support would be the bottom peaks. So like right here, you see this peak right here at the bottom. You see 1, 2, 3 kind of area. So if you would have drawn like a line right here at this bottom peak, let's see, and you go all the way over here. So once you had this support line drawn out already, you would have been able to identify a time to buy, which would have been this level of 23.44. And look at how exactly they aligned up. It was a perfect trade this week, pretty much. I shot it out on my story. It was about how much was it? 20% return this week.
Yeah. More than that. Which one are we looking at right
At the
now?
SQs.
SQ is about a 20% or what, 11%? What is it?
If you would have bought it on, let's see, it was Friday, Thursday, Wednesday. If you bought it on Wednesday, it would have been a 22% return in 2 days. Yeah.
Absolutely crazy.
Yeah, it would have been.
We had a false breakout where we thought the stock market was going to be coming back real quick, but sad to say that did not actually happen.
Well, the SQs, it was good for the SQs because the SQs went up.
Well, yeah.
Yeah, but yeah, we saw some support. This is basically support right here. Yeah, so you would have identified this support right here. You would have been able to identify this support right here, and you would have bought right here exactly when it bounced on the SMA, as you can tell right here. So I don't know if you guys see it. It bounced right on the SMA. It was a perfect alignment. And it passed the EMA, the 9 EMA too. So that would have been a perfect confirmation to buy. And that's support. Rejection would be the top peak. So right here, there's 1, 2, 3, 4. But to really identify this resistance would have been this level right here. You would have drawn this right here. You would have known that if you bought here, you would have sold right here, which is pretty much where it got rejected. It went down about 6%. You would have lost 6% of your profits if you did not sell up here. So that's one way to know when to sell. But it looks like it rebounded back up. It passed the EMA again. It just passed through that support. So once it passed this resistance, it went up 4%. That's called a breakout. Let's see. Let's go to the 5-day. Yeah, once it passed this level right here, look how it got rejected. It pulled back for like a couple minutes and it recovered, and once it passed that breakout, of resistance, it went up 4%. So that's called a gap and go. So once you see a breakout above resistance, that's when you want to start buying, and then you want to lock out pretty fast.
If anybody wants us to go over anything specifically, just put a comment down below and we'll see you
Yeah.
in the live chat and we can go over something if anybody wants to see anything. So
Yes, sir.
make sure that's out and said, and I'll remind people throughout the live stream if they want to see any of that.
Yeah.
So
Yeah, if you guys have any comments or questions, leave them down there. Oh, that was the Nasdaq, right? So yeah.
yeah, that was the Nasdaq.
I didn't even.
You're looking at SQs.
Yeah, I didn't even talk about the Nasdaq though.
Yeah, so let's go. Let's go back after we went through that. So we went over support and resistance,
Yeah.
and we went over what the simple moving averages, and that's what we're kind of looking at the moment. We'll go over the futures here now, unless someone has anything that they would want us to see specifically.
Yeah, put out a ticker or something.
And then we'll talk about how you can actually make money. So we were just talking about the SQs, which is a more safe way to be making money when the stock market's going down. So that's reflecting the Nasdaq, and if the stock market is going down, SQs goes up because it's an inverse ETF.
Right.
So that is one of the ways you can actually make money when the stock market's going down. Another way is puts, but we'll go over that here in a little bit. And that's how I actually made $1,000 in about 20 minutes.
Let's go.
On Friday. So we could have made a little bit more. We could have made about 100% actually. So that would have been about $5,000, but.
Risk management.
Risk management. We take pride where we are successful in trading, as Ricky would say.
Yeah.
If we're successful in trading because we take profits early. It's all about risk management. So if you become a good day trader and you want to go into the business world, you're a risk management advisor because you already know how to cut losses if things aren't going according to plan. But with that being said, let's go over the Nasdaq here.
Yeah, so it looks like we got rejected. So I'm gonna draw these trend lines again. So I saw a high peak right here, a high peak right here. If you would have had your line drawn out, you would have been able to identify that it was gonna get rejected right here. So in that case, you would have bought SQs for the upside, right? Because when Nasdaq goes down, the SQ goes up. Or you could have bought SPY puts, which were up like 500% on Friday, something like that.
Well, but that's following the S&P 500. So
right.
We'll talk about that.
Well, yeah. Nasdaq is pretty much technology only, but all the indices tend to like
follow each other.
Yeah, they follow it. Yeah, they correlate.
We actually, when we go over the S&P 500 and the SPY, we actually followed the SQs and the Nasdaq because as their future prices started to go down, the S&P 500 followed. So it was about like a 5-minute delay, and that's how we knew, hey, okay, this is an indication. If this huge futures area of the market goes down, then the S&P 500 and the Dow Jones will most likely follow. And it did.
Yep, sure did.
All right, so sorry, let's go back into the NASDAQ.
Yeah, so the NASDAQ got rejected at this triple top level right here. And that was on, that was Wednesday. Also, let me draw a trend line here.
So what are these trend lines actually doing? Like, why are we drawing trend lines?
Yeah, because these are the peaks. Like I said, these are the high peaks. So that's where you would draw your resistance level. So this is a resistance, this is a resistance, and this was a resistance area. So as soon as you, go ahead. As soon as you saw it approaching this red line, which is the price of 11,566. You could have started preparing to buy puts in case it got rejected, which it did. It fell right below the EMA, 9 EMA. If it would have stayed above the 9 EMA and the 9 EMA would have been in an uptrend, you would have to buy calls because this would have been a breakout, and you could have seen some uptrend from here, but it looks like it fell below. So yeah, and it passed the SMA as well, so that was a clear indication it was going down. So I was going to draw a trend line here. So the support, the resistance we can see tomorrow would be, let's go back to the 5-day, 5 minutes. So yeah.
So this is technical analysis that we're going over right now.
Yeah.
And this doesn't have to fall. The stock market doesn't have to follow this at all. This is just stuff that we can use to help try to understand and predict the way the market's going to react.
So yeah, I'm going to predict what the Nasdaq will do tomorrow morning or Tuesday. I found this high peak on Wednesday, another high peak on Friday. So I drew a trend line right above them. See that? Look how they're aligned. So we could see some rejection at this area right around the red line. And then look at how the SMA is pretty much next to it. It's perfectly aligning. So this could get rejected at this level just because the SMA
Pretty
is
hard too.
yeah, yeah, it could get rejected pretty hard as well. I mean, Mondays are typically green, but every once in a while we could see a red Monday. There's a lot of volume on Monday because everyone had a good break and they need to get back to trading, I guess. So yeah, we could see some rejection at this red line resistance or SMA in general. But if we do break above it, we could see some upside from here. Yeah, we could see some upside. We could start breaking the pattern and we'll see a different correlation coming soon. But in my opinion, right.
Sorry, I just wanted to quickly add. This is something that I was actually going to make a video about here soon. Is that because of the gridlock in the United States government right now, there's no stimulus package getting passed, and the stimulus package was kind of key because, as everybody knows, the economy, or if you don't know, this is something to learn about here. The economy doesn't follow what the stock market does. The stock market's more about the belief in the United States economy and the belief in how the future markets will be reacting. So when we're looking at the stock market and we see that the reason why it was rallying is with people still being at home and everything like that, we're looking at it because of the optimism to the future. And we were looking forward to another stimulus bill to come through and give these businesses more money to help insure and pump money into the economy and prop it up. But with the gridlock going on right now in the United States, we aren't really seeing that money come in. And that's why I personally think we're having some of this huge pullback. And until Congress can get their act together and come up with a nice stimulus bill to come through, we're going to see continued downside until it goes through. Yeah. So it could be a political thing going on. I mean, we see Republicans only wanting $1 trillion. We see Democrats wanting $3 trillion. The Republicans don't want to be giving out money to the states, the states and their local governments and stuff like that. While the Democrats do want to give this money, the Democrats are saying it'll really help keep people aligned and be able to give these states the infrastructure needed to be able to provide to these businesses and to the people. Yeah. The Republicans are saying you just want to pay off your debt. Like here near Chicago, or all of Illinois, we have a huge pension problem, and if the money is going to be going to the pensions, then it's not really going to the people. So you can kind of see where the gridlock's going, and it's just we need this money to go to these businesses, so then we can have continued optimism in the stock. Right. But with that being said, let's go into the Dow Jones here, if you would like, and then we can analyze that and see how that's going.
Yeah, the Dow. Oh, yeah, I just wanted to point out one more thing on the Nasdaq. Actually, I found a support level right here at this triple bottom. So right here would have been a bottom peak, another bottom peak, and another bottom peak right here. So I drew a trend line, right? But it looks like it passed it. Today in the aftermarket when it opened right now, the futures open at 5 p.m. on Sunday, so it looks like it just passed above it, and it looks like we're consolidating as well. So it could break above this level, but if it doesn't pass it, we could get rejected pretty hard tonight. If anything, it could get rejected tonight. We'll probably see.
If you're looking at this, the line right now, the trend line that we drew, why'd you draw that line there?
This one right here?
So people understand. Yeah.
Yeah, because I found these three support levels right here at the bottom.
Okay.
So we're currently passing it, as you can see. We're also above the EMA. So
now, if we can stay above this trend line, we'll see a support there. That's when a resistance becomes a support. If it can break above, and now it's using that as its bouncing level. That's where the new support will be.
Right.
So so throughout the night, the future market's going to be open, and if it continues to bounce on this line, we might see some potential upside up until the next resistance level of where we drew the trend line, where the top part of this. Where we saw like the whole downward arrow angle thing that we got going on. Yeah. That'll be the next resistance level for this stock.
Yeah.
For the futures contract.
Yep. So it's currently
on the Nasdaq, man.
Yeah. That's why I pointed out on the Nasdaq. It's currently passing the EMA, and it could see a move like this, consolidate during the midnight, fall back to the support, and just bounce. Could break through, but if it doesn't break through, we could get a rejection. And if it starts passing this level, expect more downfall, lower lows. Do expect more lower lows on the Nasdaq. But yeah, that's that. We can look at the S&P now. All right, so I also identified some resistance level on the S&P, which is a SPY as well. We saw a peak up here, a peak right here, and a peak right here, and I drew out this resistance line. We could start approaching it, but it looks like the SMA is in between it. We could get rejected on the SMA just like this on Friday, which would have been the time to buy. Yeah, go ahead.
Sorry, just want to quickly add, so everybody knows here, we have these bottoms here, so we might see the next resistance level, or as we've seen, if you pull back a little bit there.
Yeah. Right here.
No, so we've had a triple bottom actually.
Yeah,
we
right.
broke through it for a quick second yesterday, but it actually didn't stay. So that's going to be, if it breaks below that level, then we'll see continued downside,
right,
where it'll keep making lower lows.
Yep. Yeah, we could see some rejection.
But the next number that we're really looking for here is this SMA line. So if it can break above this SMA line, the next major resistance that we've been seeing, as Manny was saying earlier, is this triple top right over here at the 342 level.
Yep, right here. Yeah, I'm looking at
this. Just a quick reminder to everybody, if you want us to look at anything, just leave a comment down below, and then we'll check that stock out.
Yeah, just leave the ticker in the description, in the comment section. So yeah, we're seeing some, it looks like we're in a channel right now, on what's it called, a channel, so we're bouncing on it. Looks like we bounces here, we got rejected, came down, we got rejected again, came down to the support, rallied back up to the resistance, got rejected once again. Looks like we're bouncing above, we're hovering over it. We got rejected at the SMA line, which is the 180 day. Looks like we passed right below the support level, but we quickly recovered. But from here, I believe we can get rejected at the SMA, and we can see some more downfall. But if it passes above it, we could see some uptrend back up to the support level, resistance. And if we break above it, we could see some bull market again. We'll return back to the bull market as we were for the last 6 months.
So let's go over how I actually made $1,000 in about 20 minutes here. So we were trading the SPY.
Yes, sir.
So this reflects the S&P 500. And the way we were analyzing this actually was, if we go back to like how we were actually trading this back in the day, or back on Friday, we were looking at back near the beginning of the morning, we saw that it opened initially green. So that was an indication that most likely the stock market was going to go down.
Yep.
So that would have been how do I say this? Excuse me.
Our confirmation.
When we're looking at the stock market, we're looking for confirmation. So the way to usually tell if it's going to be a green day is that it has to break the pre-market high. If we aren't seeing it break the pre-market high, we are most likely going to see a downtrend throughout the day. So when you're trading options contracts, I would highly suggest personally, do not make a trade at the beginning of the day. The most volatile part of the time of the market is market open. So you have a good hour of highly volatile market movements. Yep. So the best thing to do is wait for the pattern to start to actually appear. So when the pattern starts to appear, we can actually understand what's going on. So we saw it initially in the beginning of the morning, it dropped pretty substantially. We saw about a 4-point or a 3-point drop, which is actually like insane. And then we saw it rally back up, which was normally what happens when the stock market starts to go down. We see an initial drop and then a little bit of a rally. So this is where we actually took our position. We took the position and took about a 1-point drop in the SPY. And that was about a 20% gain, because the way the options contracts work is that it's weighted a lot more heavily based on the stocks and how they actually work. So just to give a quick explanation here of what an option contract is, so everybody, what everybody knows what they are.
Yeah.
So I'll go over that here real quick. But
okay.
Just to quickly finish up what we were saying, if you could zoom in around the 11 o'clock mark, Manny.
Yeah, 11 o'clock. Yeah, I was right here.
So we saw it go and follow the same pattern as it did this morning, where it rallied up a little bit. So this was the point where we were like, hey, if we start seeing it downtrend and it break below the EMA, which is the exponential moving average, so everybody knows what that actually is. The EMA is it's more of a it's more of a up to date understanding, or more of an update. How do I say this? It's a technical indicator that tracks the price movement of the investment. So it's a weighted average that gives a more recent price data on how the market's actually going. So when we see when we see a stock price in one of these candlesticks go below the EMA and it stay below, then we have confirmation that it's actually going down. So when it broke this EMA marker at around 11 o'clock, we decided to buy puts, which was betting against the price of the SPY, and it continued to go down about $2. Can you please do that, Manny?
For where? What?
So if you look right around 11 o'clock.
Yeah, right here. Yeah.
Yeah.
This is where we bought it.
We bought right below it, right as it broke.
Yep.
The EMA line, and then can you please follow it?
Yeah, right here.
And then it fell below, and then we sold right when it hit validation, validation as it started to go above the EMA line again. So we took about a 20% or 30% profit on this move.
Yep.
Which ended up being very good.
So very rewarding.
Very rewarding. We could have seen, if you go zoom out a little bit.
Oh yeah.
We could have
I don't even want to look at it.
Seen about 100% increase in price, which is absolutely insane because it just continued to go. If we would have actually followed the patterns that we were seeing before, this would have continued. So again, we saw it pull back up, and then we saw a continued downtrend, and then we saw it pull back up, and we saw it drop even further.
Yep.
So that's something to look at. It's all about risk management. If you're willing to risk it, then you might see higher amounts of return.
Right, risk it for the biscuit.
So just to give a quick understanding of what an options contract is for anybody that doesn't know, an option contract is an agreement between two parties to facilitate a potential transaction of the underlying security at the present price, referred to as the strike price. So that's what an option is. A call option is the term that explains the price at which a security can be transacted at a strike price at an expiration date of the contract. The contract covers about a weight of 100 shares, and then we see that if the stock goes up, you end up making more money because you're betting on the price going up, and then a put, you're betting on the price actually going down.
Yep. So the way to look at puts and calls, for example, on the SPY, all you have to do is go to trade up here on Thinkorswim. And right here you have the chain of all the calls and puts. Typically I trade weeklies. We trade weeklies, but I do not recommend this if you're a beginner. I really do not recommend this. I recommend you just stick with ETFs at the beginning. So this would be a call. This side would be a call, and this side would be puts. So as you can see right here, the puts were up 50% almost. I'm going to add this to my watch list right now. Let's see. I'm going to add it to ETFs too. Yeah, right here. Let me link this once again. I should have been more prepared. All right. So as you can see, when the SPY crashed on Friday, this thing went up from look, as you can see right here, it bounced on the SMA, the put option. It went from $2.96 all the way to $7.25, which is about 144% return in 1, 2, 3. That's like 20 minutes. So if you would have bought at the bottom at open at 211, you could have made a good 242% on this put contract. These are very high risk, high reward. I do not recommend you use these when you first start trading. Stick with the ETFs. Trust me, you'll be fine with that.
If you end up wanting to sell or trade these options contracts, make sure you trade in the money. It's a little bit safer, and you won't lose value as quickly as if you're trading out of the money option. So what do we mean by in the money? So if you go back to the trade option, it's when the strike price is within the actual price of the stock. So if we're trading a call, if you have a stock price, if you're trading a call in the SPY and you want it to be 332, right? So to be in the money, the stock has to be already $332. If it's not 332, let's say it's 330, then you're out of the money. So you have to see a pretty substantial movement in the price of the stock to actually be making money. Yes, you can make more money with these out of the money options, but you're risking a lot more where you could actually make nothing and lose the whole value of your contract.
Yep.
All right, so let's go into a little bit more technicals here. If you want to go over Oracle, actually. So they just got approved to buy TikTok and go into a partnership with TikTok, which is very, very, very important. We should see this stock move pretty dramatically to the upside because TikTok is very popular in the United States and across the world. So it's a huge market for the younger audience and older people as well, but it's more towards the younger audience, I would say, so, or the younger generation. I know I sound old as heck right now, but just as investors, I don't know who's watching this, if it's more younger crowd or more of an older crowd, but this is just something to keep in mind. This is one of the new emerging tech spaces, kind of like Vine or Instagram, as people used to know them about 10 years ago.
Back in the day. So yeah, it looks like when was it, last week, when they also announced they were gonna go buy it? When they announced it. Yeah, we could see a pop tomorrow morning or pre-market. This thing could bounce up to this high resistance. 6666 could be the resistance level. I would put my alerts on that. Maybe we'll get some good.
So we could see about a 10% upside on this stock.
Yeah.
Going into the morning. So be prepared on that one if you guys want to take advantage of that. I would consider this more of a day trade or immediate swing trade, maybe a day, depending on what you're looking for. But this is a pretty important stock to be looking at.
Yeah.
If you're looking for a pretty consistent gain.
Yeah, it looks like we've been bouncing on the SMA the last couple months. So we could see a bounce again. Yeah, other than that, I don't really recommend you buy at the pre-market just because it could be a supernova, also known as a pump and dump. The thing
What is a pump and dump?
So yeah, pump and dump will pretty much be like this HGALI. This is a good example. So as you can see, on Friday, HGLI went from 39 cents up to about 47 cents. That's 20% return, right? But what happened after that? People started buying up here. Whoever bought up here pretty much got screwed the whole day because it started downtrending and downtrending. So this is a perfect example of pump and dump. It'll pump in the morning and it'll just dump the rest of the day. That's what you do not want to trade, because you'll most likely end up blowing up your account. And trust me, I've been through it. You do not want to buy pump and dumps. I'd rather just stick with the SQ and TQ and day trade them. Very simple trading, and yeah, keep it simple pretty much. Don't go trading a bunch of stocks that you see that are hyped up, because you'll be involved in it and then you'll be losing money, which is not the goal here.
Yeah, you might win once or twice.
Right.
And if you do, I'm super happy for you guys, but do not expect to always win like that.
Right.
We've all been there and done that, lost a bunch of money, but just something to keep in mind. If you are going to trade them, set a stop loss. What is a stop loss? A stop loss is a number or a price that you're willing to sell the stock for if the stock falls to that price. So like, let's say you buy a stock at $10, right? If you buy the stock at $10, Manny, stop clicking around.
Yeah, I don't know what's going on with it.
But if a stop loss is where if you buy a stock and you say you buy it for $10 and it falls to $9, if that's what you say the stop loss at, that's where you'll sell the stock. So you won't lose your whole account if it starts crashing. Because when stock, like the saying always goes, stocks take the elevator or take the staircase up, but then take the elevator down. So be prepared for that.
Yep. It's like catching a falling knife.
Yeah, as we can see with Jivo right here, we saw it blow up and then immediately fall down.
Yeah, this is a perfect example of a pump and dump.
So you guys gotta be prepared for those.
Yeah, this was a 300% move in about almost 5 hours. So yeah, for example, this is my example, personal loss that I took. I bought Jivo about, when was it? It was like about 2 years ago. Yeah, it was around this area. Where was it? Can't find it no more. Yeah, it's like, it got split a lot. So yeah, I pretty much did this. I bought up here when it was like at $10 at one point, and I ended up losing a lot of money. I lost almost 60% of my position on this. because I got so involved with the hype. I was on stock tweets a lot, like looking at what people would say about it, and I would get involved and I would follow what they would say. And so I bought it. I put in a lot of money, and I lost about 60% of my money in that position. So this is something you do not want to get involved with. Stay away from penny stocks, hype stocks, all that stuff. Stick with growth stocks, ETFs, and the FANG stocks would be my recommendation.
So what are the FANG stocks? Let's go over some of those here.
Yeah, the FANG is pretty much Facebook, Apple, Amazon, Netflix, and Google. They want to add Tesla to it, but it's still not yet ready because it's not part of the S&P yet. But we can go over Facebook, which is...
Here, before we go over Facebook, let's actually go over Tesla because we know that's a hot stock right
Oh,
now,
yeah.
especially with battery day
Oh,
coming
yeah,
up
it's
here.
approaching.
So right now, there's been a lot of hype going on with Tesla, especially with the battery day coming up. So there's rumors that they might be coming out with their 1 million mile battery. So that doesn't mean that it's actually going to go a million miles. That means this battery will not have any problems for a million miles. So let's go a little bit into what the hype is. So when you're trading these anticipation runs, see to run up because of the hype of this potential news that's coming out on Battery Day, which I believe is the 25th of September.
22, I believe.
We have to be prepared for this in the 20 what?
22, I believe. So I think
The
it's on
22nd.
Tuesday.
So the 22nd of September is Battery Day. So if you want to take advantage of this market move, my personal suggestion is to sell before Battery Day. Now, if the news is true, we might see that the news wasn't factored in and the stock might soar. But if it doesn't come true, or maybe the anticipation is already factored into the stock price, you will see a sell-off after the news happens.
Yeah.
So the best thing to do is take profits off the table, win, and walk away. Because unless you're holding Tesla for a long-term view,
Yeah.
it's not good to be holding through, especially such an important day as Battery Day.
Right. Yeah, it's pretty much just hype from here. All this was hype in the last 2 weeks. All the news was pretty much being pressed on it during these days. So if something comes out like, oh, we're not releasing it yet, something simple as that, it could get rejected pretty hard and fall back to the SMA line, which is this green line right here. That pretty much happens to a lot of companies. They'll announce something before, and they'll start putting in the news, and the news will be old, so it won't be really relevant the day it comes out. Just like the Cybertruck.
Yeah, the Cybertruck. So, actually, quick little thing. Let's analyze Apple, and then we can actually go over some cool things about Apple here. So, Apple just released iOS 14, which is huge if you ask an Apple user.
Oh, yeah.
Because we finally have widgets. So, widgets, if anybody doesn't know, it's a part of an app, or for an app that you can have like a bigger screen of it.
Yeah.
So you can put actually Robinhood on there and have your stocks that you're invested in. Yeah, look at there we go. We got Manny's phone. It's absolutely amazing.
Amazing.
One of the best feelings in the world to be actually able to follow that stuff. Get notifications for it. It's right there on your phone. So instead of leaving Robinhood up, you got these them showing these
tickers.
symbols. So it's a pretty cool update if you ask me.
Yeah,
But
I think it's amazing. I mean, it's not really going to generate profits in reality, but it's still cool.
It might bring Android users over.
Exactly,
unless
that's
you get their
true.
own headphones jacks,
Exactly.
which are awesome, but we can't change
Yeah,
that.
we'll probably dominate the Android market, so we'll start bringing in more consumers. So Apple technicals. It looks like I saw a triple top up here. It looks like we have a descending wedge. I mean. We got rejected at this point, we got rejected at this high, and we got rejected at this high. So now that I have this line drawn out, I can see that this line will be a very strong resistance to pass through it. I also found support, which is this level, this level, this level, and this level. It looks like it broke right below it, so it's going to be very hard to pass it. So we could see some more downfall tomorrow. Or if it does pass it, we could see it bounce back up here, or get rejected at the SMA as it approaches. So we could say it will be rejected around the 111 area, which was a pretty strong resistance. So we could see it get rejected right around here. Get some downfall from there. So this pretty much all I found was this triple bottom right here, and that's what my line drawn out. So now I can use it as a resistance level. But overall, I just think this thing's gonna keep going down unless we see a really strong rally tomorrow. But in my opinion, tech is too overbought.
Yeah, I'm still on that viewpoint as well. We just saw it rally extremely with everyone having to stay more at home.
Right.
But as everyone's slowly getting back to work, and we might see tech stocks have a good correction of where they should be.
Yeah.
Quick reminder: if you guys want us to talk about anything in specific or specifically, leave a comment down below and we'll cover it for you guys. So just make sure we keep saying that. If anybody wants us to look over a stock that they're really interested in seeing.
Yeah. It's
shout out. So you want to go over the rest of the FANG stocks?
Yeah, I can go over the rest of the FANG stocks. Let's see. Yeah, so we got Apple, Facebook, and we got Amazon next. I love Amazon. It's a pretty good one to swing trade. So it looks like I already have my support lines here. As you can see right here, it got rejected. I mean, it got rejected at these levels. It looks like we had a triangle pattern. It passed right through and it rallied back up. And then we used this resistance as a support level right here. And we broke right below it. And now we're bouncing at this level, this support level right here. So we could see a bounce on the Amazon. But in my opinion, I think it's going to break below it. And that's on Amazon's technicals. We also got rejected the SMA right here as well. But we stayed above it the entire time. So this is not a good sign right here. Last time we passed it, it kept going down about 18%. Right now we're down. Right now we're about 17%. So we could see the same pattern, which is about another 1% down. Next one would be Netflix. Let's see. Yeah, way too overbought in my opinion. Got rejected at the SMA, as you can see right here. We fell about 8%, which is a lot. Overall, I think we could. Let's see. We could get rejected at this level right here. I identified all these bottom support levels right here. Yeah, we can get rejected right around this area and just keep going down. That's just my opinion. I think the market's just going to keep falling from here. We're too overbought. Plus, we have a bad economic data. Next one would be Google, right?
Yeah, Goog.
Someone said check out Snowflake.
Yeah, gotta check out Snowflake.
Check out the Snowflake.
That was an interesting one. We watched it go up over 120%.
Yep.
It didn't really help with Warren Buffett. When Warren Buffett says he's gonna buy something, people fling to that. The best thing you could do if Warren Buffett says to buy something as a lower end trader like us,
right,
is to not buy after. So now, after this correction of Snowflake, we might see it within the next week a good opportunity to buy Snowflake. But right now, as things are going, Snowflake is not the answer for people to be buying because of how volatile it is.
Yeah. I don't.
For technical analysis, we don't really have enough data to buy off of.
Yeah. What's the ticker again? Snow. Yeah, we don't have any patterns. I mean, we have this one already. So we could see it bounce right here and just keep going up. So we do see,
yeah.
Yeah, it's too early.
We saw that it came back a little bit after that huge sell-off.
Right.
Now, we don't know if this is going to actually stay, but we do know at the moment now that it's very volatile. We might see a stronger pullback. We need more market data to actually analyze this.
Oh, yeah.
There isn't enough. They aren't really at the point where we can be going off their balance sheet as well.
Right.
It's a newer company. We saw them profitable for the last 4 quarters, but they're burning a lot of cash, so we gotta wait and see if we're looking for a long-term investment there.
Yeah, they're too overvalued right now. I was gonna go over Google, right?
Yeah, if you could go over Google, I'll be right back.
Yeah, sure.
You got this.
So yeah, we're seeing some support level right here on the Googles. It looks like we broke right below it. Could use that as a resistance now at that 1500 level and get rejected right there. Yeah. Let's see, guys. Yeah, we got some SQ support right here. I recommend you guys buy the SQs and TQs this week, just because I see that the TQ will bounce. Let's see. We draw a support level right here, resistance right here. So yeah, it looks like we're being rejected at the support level. So we could see some downfall on TQs and some upside on the SQs here. Yeah, if SQ breaks above that 2761 area, expect it to keep rallying. So I would recommend you buy this. Make sure to lock in your gains. Even if you see $10 gain, just lock out. That would be my best tip. Does anybody else have any questions about the SQs or TQs? These are pretty much inverse ETFs. If anybody has any questions, please just leave them in the comments. I'll be more than happy to
check
answer.
out anything, do some technical analysis on it, we'll be more than happy to.
Oh yeah, more than happy to do it. It looks like the drip is bouncing on the SMA right now. That's pretty much crude oil. If you type in /CL, you can follow this future light sweet crude oil, and you'll be able to buy drip and gush. So if crude oil goes up, gush will go up. So if gush breaks above this SMA tomorrow or pre-market, I recommend you buy it just because we could see some more upside. But in my opinion, I think the market's going to keep crashing. So buy the negative inverse ETFs. We could see some more bounce right here on the SMA tomorrow. More bounce to the upside.
So people know there's actually different SMAs, right? So depending on the time frame you're looking at, the SMA is different. So as you were saying before, we were right underneath it.
Yeah.
But in the long term, we actually are above the SMA, which is a good sign.
Yeah. So
this is actually looking like a good market correction if it stays above this SMA.
Right. Yeah, I recommend you guys use the. Let me see. I want to add my 4 charts here. I recommend you guys use 20 day. Let's see, 20 day 1 hour chart. I'm gonna add SQ right here. Let's see, red. So I recommend you guys have a 20 day 1 hour chart, a 1 day 1 minute chart, a 180 1 minute chart. Let's see, I'm gonna add back, and a 5 minute chart. So right here you have the 20 day 1 minute. You're seeing that's above the EMA. You can still buy the SQ. Day trade it pretty quick.
Why would we use these different time frames? What are they good for?
Yes.
What is each one good for?
So you want to get a better perspective on every time frame because right here on the SQ, we're approaching this level of resistance. So we could get rejected. So you want to be careful with this, right? But if you look at the long term, we're very oversold. So we could keep uptrending if the market crashes, of course. Let me add this again, actually. So yeah, if you have all these time frames, you'll be able to confirm with all these indicators. So right here on the 1 day 1 minute chart, we're seeing that it bounced on the VWAP and the SMA the entire day. But if you look at, let's see, the 5 day 5 minute, yeah, it's still above it, and that's your confirmation right there. As long as the candles stay above the VWAP and SMA and all these time frames, that's a confirmation that it will stay above it, and that's pretty much where you would buy if it stays above it. Now if you add the TQs, which is the opposite, you'll see that it's below the SMA and VWAP on the 1 day 1 minute. It's below the VWAP and SMA on the 5 day 5 minute, and it's below on the 180 4 hour chart. It's below the SMA, and on the 20 day and 1 hour chart, it's below the SMA as well. So that's where you would start buying SQs. The same thing with any other ticker. So if you would have if you had SPY, for example, it's pretty much the exact same thing. As long as it's below it on all time frames, that's how you would know that it's going to keep falling down. But as long as it stays above it,
technically
it's supposed to stay below it. But if it's above it, that's when you would buy calls or buy shares to the upside.
All right. So what else could we talk about here before we get up and go, if anybody ends up watching this in the recap? Remember to subscribe to Zobo Trades.
Yeah, I got.
He does videos about education videos about what all these indicators are, how to actually use them. While for my channel, I try to focus more on fundamentals, a little bit of technical analysis when I go over the futures at night, but mostly I'm trying to go over news, ways to help people with things, their personal finance and stuff like that, and especially going over the stimulus check videos. Those things go very well. But I try
Yeah.
to go over more fundamental things, more aspects of catalysts. What are catalysts? Catalysts are things that impact the stock that break the technical analysis. So it could either go above or below based on news that comes out. Also, I try to go over things that are more based on personal finance, more things that'll help you in your long term and in your life. So that's just something I wanted to quickly go over. So Zovo trades, great for understanding fundamentals, understanding technicals, and how the stock market actually works. This guy has a lot of experience. He's lost a lot of money and made a lot of money. So
Yes, sir.
he'll start going over some of his own personal stuff a little bit later in the year. He's trying to get to that $100,000 mark, so
Yep.
he'll be there really soon, hopefully.
Yeah.
Fingers crossed.
Yeah, I just want to point out the VIX, the volatility index. This pretty much measures how much volatility is coming to the market. It's called the VIX. It's a quick recap on this thing because I think it's important for everyone that's day trading. We got rejected at this triple top, as well as you can see, but it looks like we're bouncing on the SMA right now. So if it stays above the SMA, we could see some more downside tomorrow. So keep that in mind, guys. If it passes below it, buy calls. Stays above it, buy puts or buy the SQs. Just keep that in mind. You gotta add this VIX to your watch
So whenever
list.
the VIX does go up.
Yeah.
Sorry, go ahead.
Yeah, whenever the VIX goes up, buy short the market basically. Buy SQs, short the market. Don't buy calls, don't buy stocks. This thing's just gonna keep falling. As you can see right here in March, when the market crashed, due to COVID-19, the VIX went up about. So as you can tell,
We're supposed to say that, man. Now we're gonna get flagged.
Damn
Gotta say the
it.
pandemic.
The pandemic.
This guy.
Right, the pandemic. Right, so as you can tell, patterns repeat themselves, right? The VIX was bouncing on the SMA. It was holding above it. So this would have been a clear indication that the market was going to crash soon. It uptrended like crazy. The market crashed. People made a lot of money on the going downside. So yeah, we gotta repeat the pattern again. If it stays above the SMA for a while, start buying puts or short the market.
The stock market doesn't have to follow the pattern. The
Right.
patterns tend to repeat themselves.
Yes, sir.
If you go, actually, just a quick funny thing for everybody to enjoy. It's actually been really accurate. If you want to go over the S&P and how it's actually predicted the market crash back in March.
S&P, SPX.
Yes, I believe which one did you and I draw on before? Remember when we reached all the tops? If you look at the long term, if you go about the year,
The SPY.
weekly, 1 year. Remember? Yeah. Go back to the 5 year one.
Oh, the max.
Remember
Okay.
the line? How it predicted the market crash?
Oh yeah. Oh, I think that was the Dow. I think actually. Let me see if I can recall. Where was it? Yeah, right here. So if you would have had these.
So we actually, with technical analysis, here's the power of technical analysis, right? We actually could have predicted, and we did, so we didn't lose money. We predicted the stock market crash back in March.
Oh, okay. Did it reconnect?
I don't know. Trying to see.